Welcome back, and joining us on the show now is Kunal Shah. He's head of commodities at Nirmal Bang. And Kunal, thank you so much for joining us. And the markets have reacted to the 25 basis point rate hike from the US Fed on expected lines. The commentary also has been slightly dovish. Is the reason we've seen that sharp decline come in for the dollar index? First of all, on the dollar index itself, what's your sense on that number going on?
I think it's very interesting, going forward, what is going to happen from the inflation point of view. Because inflation, so far, whatever we have seen the downside, so far it has got no support from the housing. So housing prices and housing rent, which accounts for the major constituent of the inflation, is still not down, and in fact, it has been moving up. So last month also, the major reason why inflation did not go down significantly was the housing. So now, after the steep hike from 0 to 5%, I'm expecting in next 3 to 4 months, the housing prices and the rent in US to cool down going forward. And that will bring down inflation quite drastically. So I'm pretty bullish I'm very bullish about the prospect of the other currencies, and I'm expecting dollar index to weaken going forward. This kind of tightening should not continue for a longer period of time. The bond market of US is clearly expecting that. So perhaps 3 months down the line, the dollar index will be much lower than where it is right now. I'm not expecting these levels to stay for a longer time. Dollar index is going to go below 100. That is my understanding. And the dollar index is going to weaken. So that's the overall outlook on the dollar index. And that should lead to appreciation in all the emerging market currencies also going forward.
All right. What also could actually appreciate could be commodities, would you say, Kunal, especially the precious metal space. With the dollar index, as you said, if it continues to slide, and it is trading at a 7-week close right now, what kind of support do you see then coming in for the precious metal prices?
Precious metal prices are going to go up quite sharply. So I have no doubts in my mind. It is a strategic investment at this point also. And I'm expecting gold prices are going to go much higher in next couple of months. I'm not talking about years. So in a span of 3 to 4 months, we are going to see gold going to test, perhaps $2,100, $2,150, these kind of levels. And I'm very bullish on gold and silver. 2 reasons. Looking at the way whatever is happening with the Fed. Okay, so Fed, whatever Fed has done right now, what they are saying that they will be hawkish going forward, maybe a rate hike, but I don't think so. They can no longer remain very hawkish. The data points, the inflation in coming months is going to cool down. The labor market is going to deteriorate going forward, and that will lead to a complete U-turn of Fed maybe 3 or 4 months down the line. So I'm expecting, by the end of the year, maybe there'll be a rate cut rather than a prolonged rate hike. And this kind of steep interest rate hike is definitely going to cause some of the other damage in the US economy and elsewhere. So we are going to see a pause in next 2 to 3 months, no doubt about it. And inflation is going to go down in US, not to the 2%, but even 5% or 4.5% would be quite decent number for Fed to say that, look, we've done a great job, and they might change their stance. So precious metal looks very bullish. Central banks themselves are buying gold. So why we should not? There is no reason why we should not buy gold in such kind of times where the geopolitical tensions are heightened. Maybe Russia, Ukraine, China, US. So I think this is the right time to buy gold. Even though it is appreciated by 7-8% in a matter of last 1 month, I continue to see more gains coming in for both commodities.
Oh, well, yes, this is one of the asset classes which has actually given you good positive return vis-a-vis the other asset classes which actually have given you negative returns in the last 1 month or this year till now. Kunal, what about the base metal prices? Because even as you said, gold is going to go up. We understand that. Silver, which is half industrial metal, also is expected to do well. But the industrial metals itself haven't done so well in the last 1 month.
Industrial metal is a complete divergence of policy. China, which remains the key consumer of industrial metals, they are continuously infusing liquidity. So in last 2 months, 3 months, almost 3 trillion RMB has been infused in the markets in the form of rate cut and in other forms. And on one side, the West is continuously, going after the tighter monetary policy. But metals demand is basically coming out of China. So I don't expect any major infra boom or housing boom in China, which leads to which will be leading to moderate demand growth, and supply side is going to get better going forward. So I'm expecting, going forward, metal prices may correct in next 1 or 2 months, but maybe during second half of the year, we may see recovery. So next 2 months, I don't see any major appreciation coming in industrial metal prices. But in the second half, I'm expecting metal prices to gradually grow up because of the weakness of the dollar more than the strength of the Chinese economy. So right now, still not very bullish. After 2 months, we are going to see a rally restarting in metals.
All right. Kunal, also, what's your sense on the energy markets now? Because after 12% decline in crude oil prices in the previous week, even with the choppiness that we've seen in last 2 or 3 sessions, we are 4% on the higher side for this week for the crude oil prices. At $75, $76 per barrel, what kind of strategy would you make? What's your sense on prices for a longer term as well?
Well, in oil, if you see what is happening, the Russia's production is moving up almost 9.9. You look at the US production, it's almost up by 6 lakh barrels from the start of the year. So two major producers of oil are producing oil quite rapidly. And the demand growth, if you look at, I'm not talking about the recession, but with whatever happening across the global economy, the demand growth have remained muted. So even from the China, even that reopening trade had led to some demand, some spike in oil, but post that, we have not seen any major action coming in. So I'm expecting, Brent to floor a bottom around $68 to $70, and WTI, whatever downside we saw during the banking crisis last week, that should be the bottom. It should not go below 64, 62. And I see a very range bound to moderate upside kind of scenario where WTI can edge up to again 75 to 78 and Brent can edge up to 80. So 68 to 70, 68 to 80 would be the range for the Brent, and 66 to around 78 should be the range for WTI. No major action expected from these levels. I'm expecting some recovery.
All right, some recovery from these levels. Not sure how the Indian markets would take that. Manisha, Kunal, thank you so much for joining in. For now, things are looking good. We had an announcement on the dividend coming in from IGL as well. 10 rupees per share is the announcement that they've made, the second interim dividend for FY23, that is. With that, we're out of time on this edition of Halftime Report. Stay tuned. Business Lunch comes up next.